Good evening everyone and welcome to session recap of 23rd June 2014. My name is Nenad and today I will present you with great setups on Euro Dollar cable, Aussie Euro CAD and New Zealand Dollar Yen. Good evening everyone, and I hope that you have enjoyed last session recap. If there might be some audio problems, if it happens, it will be restored in couple of seconds, so you will excuse me if we get on some technical problems during this session recap. Maybe there will be some minor audio problems. I'm not sure why, probably due to ISP, but they will be solved. So thank you again, and I hope that you have enjoyed last session recap. It was very good. Last recap gave us more than 300 pips. It was excellent. It was one of the best session recaps. I will show you all results as always. Before we begin, our fast risk disclaimer. Online educational materials are developed by Admiral Markets AS Estonia for a global audience. Therefore, please take into consideration that information in this session may not be suitable for everyone. To get a corresponding information on charting conditions and any other detail, please visit www.admiralmarketsglobal.com, select your country or residence, and contact an appropriate entity. Risk disclosure statement stating all possible risks associated with Forex market. By accepting the risks, you're also proceeding further with me. Admiral Markets UK Ltd takes no responsibility for the information accuracy. The analysis represents the personal opinion of the author, me, and in no way represents the actual suggestion for the trade. These are not MUK's opinions, and the website in the video is not the .co.uk website, but the globalnews.com website. Forex is risky business. This should not be taken as advice. It's a personal opinion only, and this webinar is for informational and educational purposes only. So, summary of last session recap of 16th of June 2014 results. Euro Dollar plus 60, cable plus 50, it hit target price. Aussie dollar got into stop loss initially minus 35, but Friday Aussie analysis was good for 65 pips, so it was an add-on to that analysis. Euro New Zealand, that was the trade of the week, absolutely brilliant, 110 pips, it hit target price, and Gbp Euro also brilliant, it hit target price with 100 pips. So pips pool was 285 to 385. I hope that you got at least 30-40 pips out of all these pips, free pips, which were available last week. And of course, trade of the week was Euro New Zealand. For me, that was the best trade and really the trade of the week. I will show you how it went. Basically, let me show you. So, Euro Dollar, it was position sell around 36.20. As you know, 36.20 came in here. I made an update on Forex Factory and Admiral Markets block that I will be looking to sell also. It was, you know that setups are valid for today, tomorrow, and day after tomorrow. This setup was initiated basically here. 3 days after at London Open after the analysis, and I made an update that if it gets there, I will sell it. And you see it made some drawdown here, but it didn't touch the stop loss, 30 pips stop loss, and from this level we could have got some 60 pips overall. So 36.20 was very good for shorting, and you see the stop loss was never hit, and that was a very good trade. Cable was also good to trade, 69.50, stop loss 30 pips, target 1.7000. I was long on cable all the week, and you can see it here. This was the time of our webinar, and this was when the trade was initiated, and initially it was good for 52, 53 pips. Then we saw another buy after it cleared some stops there, bang, to the upside. So if you read my analysis, I just need to remind you also on Forex Street, you can read various analysts, and you can see that how they made analysis on Aussie. So I made it. This was on Friday. I sent them my analysis on Friday, Friday was June 20, and today it hit my target. You can see here, and you can also see those great trades. I made a post here. I will show you now. If you read Admiral Marquez blog, I will show you here. This was excellent trade, and I have stated many times, if you get a setup, try to spot it, try to trade it. This was the setup, and it didn't have a single pip of a drawdown. That is what sometimes happens, and I really like when that happens. Not a single pip of a drawdown. And that trade was very good. As you can see here, I will show you here. Aussie 93.70. First it was a loss, then after the analysis, look at this, and then pull back, and today it was another good trade. So we had the first chance here and second chance there. 70 pips. Excellent setup on Aussie. So Aussie was also good. But favorite trades were Euro New Zealand and Gbp AUD. Euro New Zealand, I made an interesting post also here on Admiral Marquez blog. You can see here, summary of 16th of June 2014. This was webinar time, and look at this. This was where our setup was initiated. You need to give a price room to breathe. So it doesn't have to be to the pip 80-50. It can be 10 pips up or down. So 10 pips up or down is always tolerable. And here you can see the setup, and you can see the target price was hit. Also on Euro New Zealand, this was the time of the webinar. Look at this. The trade was initiated there, and then bang to the downside. It had some drawdown, but 110 pip. It was, well, I can say Euro New Zealand and Gbp AUD. I cannot decide. Maybe this is also trade of the week, but let's call it Euro New Zealand because it gave us 10 more pips. So excellent trade for me. I hope that you have also enjoyed. I hope that you have also made some pips from this free analysis, because it was really good to trade. Those pairs were just perfect and gave us more than 300 pips overall. If we count Aussie loss, it's 285 pips, but add on to that trade was Friday analysis for 65 pips. So with that trade is 385 pips for the week. I remind you again, trades are valid for tomorrow. Trade setups are valid for tomorrow, today, tomorrow, and day after tomorrow. If I make another analysis, I will post it on Forex Factory, Twitter, and Admiral Marquez blog. Be sure to read Forex Factory, Admiral Marquez blog, and Twitter. And after you see the analysis, after you read it, maybe I can come back with update, as I did on Friday with Aussie. So use my updates and use it to your advantage. If something changes after those setups, I will be first to notify you. And here we are with new setups. Euro dollar is ranging. That is clear to you. Euro dollar is ranging. I would opt for a new sell around 36.20 with stop loss of 30 pips with targets of 35.70 and 35.10. I think that if Euro dollar hits 35.70, you can go with scalp trade. So 35.70 is scalp level. So you can try to scalp. Scalp swing, 15 pips, 20 pips, okay. Now, I can say that if it breaks 35.70, it should go to 35.50, then 35.30 and 35.10. So we need to pay attention to euro dollar. Euro dollar was not, and I can say it's not so ideal pair to trade as it was some time ago. So it doesn't have a big average range. It's ranging a lot. It's very dependent on news, on rumors, on conferences. So, you know, I mostly trade other pairs, and I present you every day potential setups: cable, Aussie, Gbp AUD, New Zealand yen, other pairs. So, you know, euro dollar it was a pair good to trade back in days, some 5-6 years ago. Now, today, it's okay. It's a major pair, but it's not particularly fine. So you can see there are no big setups. Also, positions are either hit or missed. It's ranging a lot. So basically, what I suggest is either sell or buy, but around these levels. In between, it's nothing in between. Really, it's nothing in between. There is no particular interest to trade it until it hits a predetermined level. Usually, if you trade it in between, you can be stuck in a range, and you don't want to be stuck in a range. So my primary thought is to sell if it gets around 36.20 again. Small stop loss 30 pips. It's not a big stop. Again, targeting 35.70, 35.10. Or if it gets to 35.70, why not? We can try a scalp trade. I think that scalp trade can be executed around that level. It might not just be 35.70, maybe it will be 35.72, or, you know, give it some room to breathe. And let me show you Gbp Euro Dollar. You can see Euro Dollar, and I will show you the level 35.70. So you can see here a rejection for a scalp trade, then breakout, some pullback, retest, continuation. Then historical buyers are here, here, here. Historical near-term buyers are here. So do you think it will make some pips once it hits this level? I think it will. Judging from history of price or price action, you can see that there are many historical buyers here. Here, 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 there. For a scalp, there should be enough. For a sell trade, well, this is the level to watch for. It may be in a range another week, but still we need to try to trade it around those levels. Gbp Dollar is in uptrend with a current retracement. That is what I see on Gbp Dollar. I have a pending order, so if I see that it might get hit and the price momentum is good, I can go. Gbp Dollar is in uptrend. We can try to buy around 69.50 with stop loss of 30 pips with targets 70.00 and 70.40. So again, it's a range, but it's a still, you can see a range. But still it's in uptrend. This is uptrend and this is retracement in uptrend. Now if you put the Fibonacci from this level to this level, you can see again a confluence. 69.50, you can see historical buyers there. This is momentum candle. I was teaching you, if you remember, about momentum candles. So this is momentum candle. And at that region, we at least can go with a trailing stop for a nice position. So we can use trailing stop, or we can also use some, let's say, we can start with scalp swing and then turn into intraday position by using trailing stop. I explained that on the webinar, how you turn scalp swings into intraday positions. So at that level, I think there will be some buying. But also, if this level fails, I will go with breakout retest sell trade or breakout pullback continuation trade, depending on circumstances. So it's still an uptrend. It might be a deeper retracement. Then we would need to zoom to 4-hour time frame. But on a 1-hour time frame, this is the level to go long, and below 69.20, it's a level to go short on a breakout retest or breakout pullback continuation. Okay? So this is about cable. Now Aussie, again, everything is in range now. I would try to go with positional buy again. 93.70, so it's a trend following trade. So I didn't make any counter trend trades because, you know, look at these huge buying candles, and still we need a pullback to this level if it wants to go down. But again, I think that at around this level, it might go long for at least scalp swing trade, 15-20 pips, but use your trailing stop. This was our chance to go long. This was our chance to go long. Another chance might be the last one if it gets there. Okay? EUR/CAD is in strong downtrend. 46.25, stop loss 30 pips, 45.50 for EUR/CAD. Confluence zone spotted around 46.25. Look at the zone. Double top. 38.2 retracement. Round number, let's say 25. It's 25, 50, 75, 00. Those are natural support resistance levels. I will answer all of your questions later, because I can see that some of you, unfortunately, do not know how to use pending orders, and let me finish with presentation, and then I will explain you why I sometimes use 30 and sometimes 35 pip stop loss. You need to take account the spread, guys. You need to take spread into account. And I will explain some basic stuff. Just let me finish with this. So 38.2 is retracement from the last swing high to the last swing low. We have 46.25 as previous double top. Here you can see that price was indeed below this level. This is a doji. This is indecision candle, a spinning top, and here you can see that the price twice closed below the level. And if it gets back here again, it can form inverse head and shoulders, but that would mean that it needs to go down again. So at least it will good for some pips. Okay? At least it can go for some pips here. EUR/CAD. I will be looking to sell here with 30 pips stop loss. I will show all slides again, don't worry. And New Zealand dollar yen, Kiwi yen, it's in uptrend. We have buy position around 88.05. 88.05. Another chance to go up. This is 88.08, but it's actually we can call it 88.05. Because, you know, 5 is more important than 8, but even if it gets to 0.8, we can go long. So I have taken into account this low here. So basically, it's 88.05 to 88.010, okay? So it doesn't matter. If it gets here, I would be looking to buy. We have history of buyers there. Look at this. This was a gap, retail gap, and basically this was this happened at the open. After that gap, it went here, retested 88.08, and then it went up. If we get to this zone, historical near-term buyers were here, and we can go for another long trade. So I'm planning to go long here. At least I want to see 15, 20 pips, okay? And that is why I will be using trailing stop again. Now, Kalyan asks, why do you use stop loss as 35 on Aussie, whereas on other pairs you use 30? Sometimes you need to take into account the spread. If you see the spread is 3 pips, then you widen your stop loss. Also, if you make pending order, you need to widen it. Let's say that you want to buy, for example, GBP New Zealand dollar. And I say, okay, you should buy it around 95.30. If there is a spread on GBP New Zealand, 5 pips, then you need to add the spread to the price pending. So if you want to buy at 95.30 and there is 5 pip spread, you actually will buy it at 95.35, okay? That will actually bring your stop loss a little bit higher. So let's assume that your stop loss is 30 pips, but your spread is 5 pips, and you have a pending buy order. So you won't be buying at 95.30. Effectively, you will need to make a pending at 95.35. You always, guys, remember this for always, because I think that 95% of you don't know how to do that. You always add the spread on buy trades, and you never add the spread on sell trades, okay? So when you are buying, you need to add the spread. When you are selling, you don't need to add the spread, okay? So 5 pips pending buy is actually plus 5 pips. So if you want to buy at 95.30, look at this. Your ask price is 95.35. So you should go with 95.35 buy trade. Actually, you're buying from 95.30. This is the level. But, you know, spread is 5 pips, so actually you need to add spread to buy pending orders, okay? If you want to sell at 95.30, you actually don't add anything. You leave it as it is. And because of that, you need to widen your stop. If your stop is 30 pips initially, because of the spread of 5 pips, you use 5 pips. But 30 or 35 pips, it's nothing. If you use normal money management, that's really nothing. So basically, sometimes if I also see that last high or low is more than 30, 31, 2 pip, I will add 3 pip more, so that is 35 pips. Actually, all of those what I'm showing you are Camarilla MACD setups. But I cannot show you Camarilla MACD system because, you know, I don't give it for free, but thanks to Admiral Markets, I give you all of these setups for free. So even though if you don't trade Camarilla MACD, you get all of those free setups on session recaps and everyday analysis, okay? But if you want to learn it, of course, then it's another thing. This is the course. I have invested a lot of time, a lot of effort into that, and you know, it cannot be free. But thanks to Admiral Markets, all of these setups on session recaps and everyday analysis, which is basically derived from Camarilla MACD method, you are given for free, okay? And use that information. Take that into your advantage, because you know there are not many free pips over the internet. So use that information to your advantage, guys, okay? Kalian also asks, why not sell at 700 retest? Why not sell at 700 cable? Because I think that if it breaks to 700, it might be a false break. You can see it here. Look at this. A history of buying at 69.85. So if it breaks, it will only make maybe 15 pips, and then it can shoot up. That is why I actually would like to see it here. This is the low, this is the high. This is the lower low, lower high. This is, what is this? It's the lower low. Now we have also a lower high, and next lower low can be a start of leg to 69.50, guys. Okay? So it can be a start to 69.50. That is why I don't like to sell at 00 support. I'm more eager to buy here than to sell. And actually I did that on Camarilla MACD analysis today. Let me show you. I will show you Camarilla MACD analysis. Okay. L5 78.6, round number, actually 50, natural support resistance zone, and bang, it can go here and go to retest this trend line break. No, I would go from GBP's buy from 69.50. It might go from 69.88, but I would prefer at 69.50. 69.50, I showed that already on cable. So I will go through these slides again. Now you know how to make pending orders. I think I need to make a webinar also for that. So you need to add the spread to buy orders, buy pending orders, okay? So these are the slides. So if you want to ask me anything, go ahead. No problem with that. I'm eager to answer all of your questions. So Euro Dollar slide, GBP Dollar slide, Aussie slide, Euro CAD slide, and New Zealand Yen slide. Okay? So actually on Aussie there might be some nice buying opportunities here if this level is to be tested again. About dollar yen, I didn't make any particular analysis. I can do a quick update on dollar yen. Let me see, dollar yen, dollar yen. This is heavy range. Look at this, guys. I don't like to trade this now. This is ranging heavily now. Only 26 pips on H1. I don't see any good setup except for this head and shoulders potential. But again, if this is head and shoulders, you can try to sell from this level 102.00, and then it should go down. If it breaks this level 101.73, then it can go to 101.20. It can be head and shoulders, but it's ranging heavily. Look at this. This was a breakout, but false breakout. This is, I don't like this price action on dollar yen. So but not particularly interesting. The dollar Swiss is contra to euro dollar. So basically, you can see it here. This looks like uptrend, and this is why I would like to sell euro dollar. So if dollar Swiss goes up, euro dollar goes down. Okay. And if you draw a Fibonacci from the last swing to the high swing high, you can see that basically also 61.8 is a good level to maybe go for potential buy trade. As this was the last mini swing, so stops should be placed just below, and then we can go up from here, and basically that will make euro dollar go down. So if you trade dollar Swiss, you are also trading euro dollar. So it's the same but in opposite direction. So basically it's the same but they're going in opposite direction. Okay? As you use 30 to 35 pips stop loss on each pair, how important is this level at 30 to 35? Because what if it breaks to 35 or 37 pips and shoots up? Always add the spread. If I say 30 pip stop loss, that you need to add the spread. If the spread is 2 pips, then it's 35 pip stop. If it's 35 pip stop, then it's 37. Camarilla MACD is built to use small stops, and that is intraday trading method. You use trailing stops. There are some rules which needs to be respected. So 30 to 35 pip stop is excellent because you are risking only 0.5 to 0.8. That is none of a risk. If you do money management, which I teach, 0.5 per trade. So you can make 4 trades with 4 maximum losses of 30-35 pips to only give you 2% of a loss. But if you trade how I trade, you will rarely have really 4 consecutive stop loss hit. If it takes 30 to 35 stop loss, I am okay with that. I don't have a problem to say I lost 35 pips. Because if I lost 30 or 35 pips, I actually lost only 0.5%. Will AUD hit 95.00? I think it needs a catalyst to hit. There is a chance that that level will be hit, but that level is protected for sure. That level is protected for sure. So you can see actually in the history here, 7th of November, and then sell. This was basically a swing, and then we had a huge sell. Then we see inverted head and shoulders here. This is neckline break, breakout, pullback, continuation trade here, and then we can see another W pattern forming in. So if this level breaks, yeah, there is a chance for 95 to be hit. Okay. I'm sorry I could not question properly. If 30 pips stop loss means, imagine 35.10 is level. What if this level is not an important level and if it is protected? Sorry, I really cannot understand the question. Chakravarti, sorry, I don't understand. 30 pip stop loss is stop loss which I suggest to use if you trade these setups. So I don't understand what you are asking me, really. Will dollar yen hit 103.00? I told you already about dollar yen. It's really ranging heavily. 103 level. You need to wait for a breakout. If this level is broken out, then there is a chance for the pair to hit. But you don't guess. The problem with 95% of traders and analysts is because they guess. How can I know if dollar yen will hit 103? I am a man of action. And when I see a setup, I post it on Twitter, on Facebook, on Admiral Markets blog, Forex Factory. If this level is hit, I need to see momentum. If momentum is strong and there is a breakout, pullback, retest, or continuation, then yes, it might be hit. But because we are traders, we don't gamble, we don't guess what it can be or what it should be, then we are using trailing stop. And Camarilla MACD is built to use trailing stops. That is how I do. I always use trailing stops, okay? So that is the answer to your question. If this level is taken out, then you can go with breakout, pullback, continuation, effectively protecting your trade with trailing stop. And then you can place your final target price at 103, but you will use your trailing stop to eventually protect your profits, okay? Judging from 4-hour and daily, there is a possibility, but I don't like this range. That is why I don't trade dollar yen, and I won't trade it this week. How big trailing stop? Trailing stop I usually advise is after 20 pips of profit. You can either when price makes 22 pips, you can put your trailing stop to 20, effectively securing 20 pips, or after some 15 pips you can put your trade on break even, okay? But I usually want to put my trades on profit. Okay, dollar yen I answered, dollar Swiss I answered. So where can I get info about Camarilla MACD system? If you're interested in Camarilla MACD trading method, it's not system, it's complex because it's method. It uses 4 different potential setups. Those are trend intraday, counter trend intraday, scalping on 5-minute time frame, and breakouts on 30-minute time frame. So actually, if you want to know something more about Camarilla MACD, you can drop me an email, tarantulafx@gmail.com. So you can ask me whatever you want about Camarilla MACD. I will answer, so no problem. I tend to miss my orders on buy pending orders. Now you know how to make pending orders. So again, I will repeat for any of you who don't know how to use pending orders. For example, GBP New Zealand 5 pip spread. If you want to buy it 95.30, you're actually buying at 95.36 because of the spread. GBP Aussie, if you want to buy it 80.72, you are actually buying it at 80.75. So you always add spread to buy pending orders. That's clear, right? Okay. So guys, if that is all you wanted to know, then okay, we might call it a day today. So you know what setups are. Be sure to visit all webinars, and all those webinars are for you because I'm trying to help you. I will show you now. Let me show you. Let me. Where is Euro Dollar analysis? Here I will show you here on Admiral Markets under webinars educations. There are always very, very interesting webinars, guys. Always very interesting webinars. Be sure to sign up for that because that is free information. Hourly, daily pivot point indicator will be given around June 29, and webinar is at June 29. I will present you complete custom indicator trading system for all of you who are novice traders who don't know how to trade. I will give you a custom indicator trading system. Price action trading, session recaps, Keltner, Bollinger, envelope channels, all those infos are free to you, so actually you can benefit from it. I will probably make a special webinar about pending orders in August, I think, after I get back from vacation and holiday. So guys, thank you. If you don't have any further question, you saw my setups. I will be constantly updating if I see opportunities on Facebook, Twitter, Admiral Markets blog, and Forex Factory. So if you want to trade those setups, then it's up to you as always. As you can see, if you traded last session recap, you could have got at least 30-50 pips out of 380 pip pool. So be sure to check those levels, to check if it corresponds to your trading method. As I say, all of session recaps are Camarilla MACD, and so far all of those are very successful. I am not a person who talks nonsense. For all of those who want to teach Camarilla MACD, of course, I always provide, and I have been and I will be providing, my real account statement to see how my real account statement is trading Camarilla MACD. So for all of you who don't want to learn Camarilla MACD, or maybe for all of you who want to learn, these are setups taken from Camarilla MACD. So thanks thanks Admiral Markets for support, and of course for your support, because when I see such good comments about trades, I'm really happy. And when I see that you have made 20-30 pips from my analysis, I'm happy, because I want to help you. I want to help you make profit. I know that many of you have families, many of you want to trade, many of you are eager to learn to trade this beautiful Forex market, and that is why I'm here, to help you make profits. Even though if you don't want to learn Camarilla MACD, I'm providing you, especially novice traders, free systems which you can at least make some profits on starters. But believe me, if you want to be professional traders, you will need to teach and you will need to know how to trade 24 pairs, not just 2 or 3 pairs. Those are developing stages of Forex trader. And that is what we all have been through. So that is all I wanted to say today. Thank you guys. As always, be sure to sign up for webinars, free pips, visit session recaps, and updates on all of those potential setups. These are levels I'm waiting for also. So thank you guys. Cheers if you don't have any further questions, and I will talk to you very, very soon, guys. Cheers.